This is the Rich Dad Radio Show. The good news and bad news about money. Here's Robert Kiyosaki.
Hello. Robert Kiyosaki, the Rich Dad Radio Show. The good news and bad news about money. And today I have a very special guest, a longtime friend, fellow Hawaiian, Mr. Bert Dohmen. And we have a very important subject, is how to survive soaring inflation. But also I'm going to ask Bert one more thing, one more question. What goes up also comes down. And I suspect we might be heading into a depression with inflation. Some people call it stagflation, but this one is so severe because we have a global liquidity crisis. There's no money. It's drying up fast. So I'm going to talk to Bert about that, and we interviewed Jim Rickards, Currency Wars, and he says the biggest problems in the shadow banking system we cannot see, the euro dollar, the euro yen, and all that. So inflation is up, gold prices are down, real estate's crashing. What else could we ask for? Right, Bert?
Well, Robert, as always, you are right on.
Thank you.
I agree with what you said about inflation, especially stagflation. And right now, you have to be so careful about who you listen to on the TV, because they're equating now, economists are equating now a slower economy with lower interest rates. If that were true, then Zimbabwe's economy would be booming, and Venezuela, people would not be eating out of garbage cans. This is not true. All these economists, they have the same problem. They believe the textbooks that they had in college. So, my degree is in chemistry, but I took 2 years of economics just to find out why economists are always so wrong.
Yeah.
It's the textbooks.
Hey, Bert, one day the school teacher said, I said, why don't we have financial education in school? And I was talking about, the income statement, balance sheet, basically a financial statement. I always say my banker's never asked me for my report card yet. My banker wants to see my financial statement. And they don't know what a financial statement is. They say, yeah, but we teach economics. I said, which one? And they didn't know there's different economists, like Keynesian, Marxist, Malthus,
exactly.
Adam Smith, Ricardo. These teachers who are economists are more stupid than the students. They don't even know there's different economic theory.
Yeah, it's
Can't
very
believe
sad.
it. And I don't have a degree in economics.
Yeah. We see once in a while the former Federal Reserve Board members giving their opinions on the economy. And I shouted them, and they're all professors now. And I really pity those poor students.
Yes. I agree with you 100%.
So what are you doing to make money nowadays?
Well, I took a gold mine public, the richest gold mine in America. It's in Provo, Utah, went public July 8th, 2022. And our ore grade samples are through the roof, and we're going to take a NASDAQ next year, I think. So, and then I've been a gold bug since Vietnam. I tell the story of I'm on an aircraft carrier flying a gunship for the Marine Corps, and I'm looking at this thing that says gold. Next thing took the dollar off the gold standard. So what does that mean? Because they don't teach us in school. So my co-pilot and I flew behind, it was enemy lines because the NVA North Vietnamese Army had overrun the damn place. So we went behind enemy lines, we disarmed, and walked through the village in Vietnam, and all the people go, what the hell are you guys doing? He said, well, unarmed, we're here, we come to buy gold. And so we walked up to the window, and the little Vietnamese woman with bright red teeth, because they eat betel nuts. And she was showing us gold nuggets. And I'd never seen gold. And my co-pilot never seen gold. And because it was illegal. Remember, it was illegal for Americans to own gold. So he looks at me, I look at him, and he goes, is that gold? I said, I don't know. I thought you knew. And us two idiots are standing there in front of her. And so I tried to discount it. I think it was about $50 an ounce then, up from 35.
Sure.
And I tried to get it down to 40, and she just smiled a bright red teeth, says, spot. So what does spot mean? Do I have a spot on my shirt or something, But I didn't know at the time, but when I got back to the ship, she educated me. This little Vietnamese woman, she educated me. Gold is money throughout the world.
Exactly.
That's what spot means.
Yeah.
So that's what are you doing?
Well, we said about a year and a half ago, we're going to go into a period of time that'll be terrible for people who are not informed.
Correct.
And I agree with your depression. I've been saying that. In fact, in early 2020, we wrote that we're going into a depression. If you want a roadmap, just read about the Great Depression of the 1930s. It's going to be very, very similar, except it will be worse.
Right.
Probably will be much worse.
And why it's worth is because what we did in 2008. When the derivative markets came apart, and they just printed more money, was put this thing in a bubble.
Yeah, but they have printed so much now; they can't print much more.
No.
And we saw a warning signal. Usually before these events, like Lehman Brothers and so on, you have several smaller events that don't get much attention. In fact, the default rate on subprime mortgages was soaring in 2007. And Bernanke said, "Oh, that's an isolated situation, nothing to worry about, no recession in sight." And then, of course, we had the Lehman Brothers crisis in 2008, and everything fell apart.
And Bert, what about this year, the Bank of England having to pivot,
and the
pensions nearly collapse?
Exactly. I was just getting to that. That is the canary in the mine.
Yeah.
When suddenly the pension plans had to sell their leveraged treasury bonds, or gilts, as they're called, in Britain. They were leveraged. People had no idea that pension plans can use leverage and derivatives. This is incredible. Nobody knew this. No. So suddenly they got margin calls. They had to sell their gilts to get money, and there were no buyers for the gilts. So the Bank of England had to come and buy the gilts from the pension plans. Otherwise, the pension plans would have gone bankrupt. And this was the canary in the mine. This is going to happen. We have $177 trillion of derivatives in the United States. That is an unbelievable amount. 177 trillion, not billion dollars. And you know that the four biggest banks in the United States hold 90% of those derivatives.
Correct.
Four banks.
And that other thing too is globally it's a quadrillion in derivatives.
Yes. Over quadrillion, 1.4, the best estimate. Yeah.
And what people may not realize, when you have a liquidity crisis, it's because they're finding out their so-called assets aren't assets. And that's why they have to sell their bonds.
Yeah, you wrote that in your first book, Rich Dad, Poor Dad. An asset can also be just a liability.
Correct.
Look at the cash flow. Yeah. And, someone we both know in our business sent me your book. He said, "What do you think? I want you to read this book and tell me what you think of it." I said, "I don't know him at all, but I think he's right on the button." And my friend disagreed. He said, "No, real estate is always an asset." No.
Well, Bert, both you and I growing up in Hawaii, right?
Yeah.
The difference was my poor dad was Japanese, rich dad Chinese.
Yeah, there's the difference.
Chinese are very smart with money.
Oh yeah.
Japanese aren't, they're savers.
Yeah, they're savers, exactly. Yeah.
So anyway, what can a person do? Because I'm backed up all the way with gold, silver. I have mining shares and all this. I have oil wells. I have beef. I have things the Fed cannot print. That's my claim to fame. I have no stocks, no bonds, no mutual funds because I just don't like paper. After Vietnam, I didn't trust it. But you're into all these different types of markets and all this. What do you recommend? And this is the worst term is, what does the average person do? And my advice is, don't be average. This is not a time to be average. So what do you recommend?
You want to be in a minority. This is the time you want to be in
Smart.
the minority. And I'm not talking about racism. I'm talking on the monetary side. And when we gave this advice that we're going to go into the opportunity of a lifetime, we said,
Yes.
and it's not buying. It is, we said, go and sell short. You sell short stocks. You shall sell short just about anything you can think of that everybody has been piling into. Sell it short, and you will make money beyond your wildest dreams.
Right. But Bert, now you're getting my heart racing because that to me is terrifying. How do you? I mean, I've tried short and got my butt handed to me because it went the other way.
There's an easy way now. There's an easy way, Bob. They now have ETFs, and they do this short selling for you. They are designed to rise in price when the index or the sector declines.
Okay.
And that makes it so easy because most people cannot understand the idea of selling something that you don't own. Okay?
Yes.
And that's what short selling is.
Yes.
And so these ETFs, and they have them on the indexes like the S&P, the NASDAQ, etc. They have for countries, they have these inverse. They call them inverse ETFs. And that is the easy way. You just buy them and they go up, they soar in price as the market collapses.
Okay, so let me make a caveat. We at Rich Dad do not recommend investing in anything. We basically tell people what we do, but we don't recommend people do what we do.
Yeah.
So because, like I said, when I was learning how to trade options, which I'm not good at, which is why I'm a real estate guy, because real estate's slow, options are faster. But the idea of selling something you don't own just terrifies,
But, you just said something very important, what everybody is into. Everybody's into options. This is incredible. And, when I started my business in 1977 in Honolulu, downtown, okay, we recommended options, okay, and it was great. And then in 1980, we got a sell signal on gold, dropped through $694 and said, that's our bear market signal. Now you want to do exactly the opposite. Instead of buying call options, you buy put options. So at the end of 2 years, our put options were actually worth more in some cases than the mining stocks that were underlying those. It was fabulous. But here again shows there's nothing forever. What goes up will also go down. Now, you talk about precious metals, and I get this question very often. What should we do? And it's always good to have some insurance position in gold and silver. I kind of prefer gold, but what I really prefer is the mining stocks. The mining stocks, they're not going to confiscate. With the way the government here is right now, it's also very similar in the 1930s, where the government confiscated gold, okay?
Right.
So we could see that again. But they're not going to confiscate gold mines, okay? So
Wait, Bert, hold 1 second. I had my first big gold mine play was in Dalian, China. I raised $27 million on the Toronto Stock Exchange. We struck gold, and the Chinese said, "Thank you." I learned the hard way, Bert. It's called country risk. So do you know what I mean? Different countries will take your gold mines, but America, hopefully, they don't do that here.
Yeah.
Now, keep going. So.
You can't be sure about anything over here right now.
No.
Yeah. Things have changed. So, but one thing, you have to be very careful because the people on TV, they're going to start saying when the Federal Reserve pivots. Pivot is an outer word. In other words, when the Federal Reserve changes from quantitative tightening to quantitative easing again, someday in the future, okay? And then they say that's when you really want to buy gold. And in my opinion, well, not in my opinion, research shows that once the Federal Reserve starts easing money from a tight monetary policy, that's when the biggest part of the stock market and the gold mining stocks appears. They tank when the Federal Reserve eases. And this is always the big trap. People think, oh, the Federal Reserve is easing. Now we got to buy. No, it isn't. If you look at the charts, this is when you have the last big, strong drop in all of these assets.
Right.
So you got to be very careful. And that's why, the last time I was on your program, I said, if you look for an advisor, find somebody who has been in the markets for at least 44 years.
Right.
Why 44 years? Because they remember 1978, 1979, 1980. That was a very important period. It was the last peak in inflation in the U.S. What's really important here is to know some history. And many of the analysts that everyone knows, they don't know history, or they don't want to talk about it. But in 1980, we had a peak in inflation. It was around 15% in the U.S. Okay. Now, officially, we have 8.3%. Okay, officially. But Dr. John Williams, who runs Shadow Stats, he calculates it the way they did in 1980, and he said it's actually 16.8%.
Yep.
So, and that puts us right in the range of all the big countries in Europe and so on. They also have big double-digit inflation right now. So our inflation rate is now much higher. But what the important thing is, our Fed funds rate right now is around 3.7%. Fed funds. That's the short-term interest rates, where the Federal Reserve says that's the rate we want for short term. You know what it was in 1980 when we had inflation about like it is now? It was 20% Fed funds.
Jeez.
20% rate. People don't mention that. Maybe they don't know it, or they're trying to hide it from people. But there's another thing that is not mentioned. Powell, Fed Chair Powell, not the last meeting, but the one before that, he said our goal is to have the spectrum of interest rates, spectrum meaning from short-term 90-day T-bills, let's say, to the long end, to long-term bonds, above the rate of inflation.
Oh.
Okay? So even if we take their phony rate of inflation, 8.3%, that means that interest rates will have to double from here.
Right.
From the range of 4.5%, they're going to have to go over 8.3% to fulfill that. Nobody talks about that. Why are they hiding this? He said it on national TV. He said it. So this is so important. Interest rates are not anywhere near the bottom.
No,
and that's why a year ago we said that we're going to have the opportunity of a lifetime also short selling Treasury bonds. We have some clients that are billionaires, and they made a lot of money in 1978, 79, when we said short the Treasury bonds. At that point, I said T-bonds will go down 40 to 50%. Wall Street chief economist for Goldman Sachs said that's absurd, but it happened. They declined 44%. This time I'm saying, by the time it's all done, Treasury bonds will be down maybe 60 to 70% from the time. Do you know that they're already down 48%?
Yeah, Bert, I think we're over the head of most of our listeners right now because you're talking numbers. I like to paint pictures. That's what we do at Rich Dad here. Interest rates just go up a little bit, and I was at a big major bank right near my house in Phoenix, and the whole place was empty. Not from customers, but their mortgage department is cleaned out.
Yeah.
And, Twitter just laid off, I don't know how many millions of people. Amazon's laying off people and all that. That's what that means. So we can talk about interest rates and percentages and all this stuff. But the thing is, as we said, what goes up must come down. And the question I'm going to talk to you about is, what can a person do? How do you think about this? Because I think we're in a serious almost a Weimar Republic, what brought Hitler to power type of situation where it's so goofy. And I'm concerned for everybody too, because they're calling for riots in Europe. China's in serious trouble, because when we slow down, they slow down. So this is not just a U.S. thing. This is a global challenge we're coming up to. And that's
what
what
is so important is China was for about 20 years. They said it's the locomotive of the global economy.
And it was.
Okay. That locomotive has now stalled out.
Yep.
It's standing still. The locomotive, in fact, I think they're going in reverse.
Right.
Okay.
Right.
This is the locomotive for the world.
Bert, we got to go to break, but this is not just China. It's Europe right now. You know, they're cutting down trees to heat their woods just to keep the greenies happy so you don't burn fossil fuel. I mean, give me a break. This is nuts right now. So we come back and we're going to more of what a person can do rather than read statistics and all that. Because if you're one of those guys who was in the loan department of the bank I went into, you're looking for a job. We'll be right back.
When the financial markets plunge or soar, are you confused about what to do? Wondering whether you should buy or sell? Did your investments suffer devastating losses since the market top of November 2021? Over the past 12 months, most investors have endured painful losses as over $46 trillion of value has been wiped out in the global stock and bond markets. However, frequent Rich Dad guest, Bert Dohmen, founder of Dohmen Capital Research, warned his clients that the bear market had started in November of 2021. He called it the opportunity of a lifetime for investors who know how to profit when stocks plunge. Remember, stocks decline faster than they rise. Bert Dohmen is world-renowned for catching market tops and bottoms, warning his clients of every significant stock market plunge over the past 45 years, including this one. You've likely seen Bert Dohmen's views in the major national media and heard Robert talk about Bert Dohmen's award-winning Wellington letter on his show, saying, "In a world of fake news, the Wellington letter is priceless, and your best investment would be the Wellington letter." With Bert's experience trading the markets for over 4 decades, using advanced technical analysis, he developed a strategy that allows his members to catch market tops and bottoms, often within 1 or 2 days of the turn. That way, members can thrive in both bull and bear markets. In fact, all year long during this bear market, Dohmen's members have had incredible opportunities to not only protect their hard-earned wealth, but profit over 17% while the NASDAQ plunged 30%. That's an outperformance of 47 percentage points. If you've endured big losses during this bear market, quit doing what got you there. Isn't it time you got the advice from a professional who is truly independent? Financial freedom is the ultimate dream, and with Bert Dohmen and Dohmen Capital, you can learn how to achieve that goal. Head over to domencapital.com/richdad to take advantage of an exclusive limited time offer. This offer won't last long, so go to domencapital.com/richdad today. It may be the best investment you'll ever make. Hey everyone, it's Sarah at the Rich Dad Radio Show. Let me tell you, good sleep is the ultimate game changer, and the 8 Sleep Pod is the ultimate sleep machine. I live in Arizona. It's over 100 degrees today, and it's only expected to get hotter throughout the week. And the Pod is the only sleep technology that dynamically cools and heats each side of the bed to maintain the optimal sleeping temperature for what your body needs. With the Pod, you can start sleeping as cool as 55 degrees Fahrenheit or as hot as 110 degrees Fahrenheit. And clinical data shows that 8 Sleep users experience up to 19% increase in recovery, up to 32% improvement in sleep quality, and up to 34% more deep sleep. And 8 Sleep recently just launched the next generation of the Pod. The new Pod 3 enables more accurate sleep and health tracking with double the amount of sensors, delivering you the best sleep experience on Earth. And all you need to do is go to 8sleep.com/richdad to start sleeping cool this summer and save up to $150 on the Pod. 8 Sleep currently ships within the USA, Canada, the UK, select countries in the EU, and Australia.
Feeling powerless over current events and your financial future? Financial freedom is your freedom. Robert Kiyosaki is the best-selling author of Rich Dad, Poor Dad. Over 40 million people have taken Robert's advice. Now it's your turn. Attend Robert's free virtual wealth building event. Claim your free access now at richdadfree.com. Don't wait, access is limited. Go to richdadfree.com. That's richdadfree.com.
Welcome back, Robert Kiyosaki, the Rich Dad Radio Show, the good news and bad news about money. You can listen to the Rich Dad Radio program anytime, anywhere on iTunes, Android, and YouTube. And please leave us a review whenever you listen. And all of our programs are archived at richdadradio.com. We archive them for one reason, is because repetition is how we learn. Like you don't learn to play golf hitting the golf ball once. You got to keep doing it till it settles in. And listen to this program again, probably 2-3 times. But more importantly, get your friends, family members, and that crazy uncle of yours to listen to this who still believes in Santa Claus and the Easter Bunny, and the Fed will save them. And all these guys don't fight the Fed and all that. I'm going, you guys, they don't get it. So our special guest today is a longtime friend from Hawaii. Bert is infamous. I mean, every time his letter came out, people would be screaming and yelling, "How dare Bert say that?" And my definition of intelligence, if you agree with me, you're intelligent. I said, Bert's very intelligent. I said, he's giving us an early warning system. He's saying this is what's coming down the road. But more importantly, this is what I was talking to Bert about during the break. We can talk what the Fed's going to do, what the Treasury is going to do, what Wall Street is going to do. A more important question is, what are you going to do? Because you and I are not going to change the Fed. We're not going to change the president. We're not going to change Wall Street, but we can change ourselves. And that's my leading into Bert has the best newsletter going because it is timely, factual, it's brilliant. And he publishes the Wellington Letter. It's put out by Dohmen Capital Research. That's what you can do. And that's my plug for Bert, because we start rattling off numbers, my mind checks out. But if I see it in writing, I have a chance. So that's why please get Bert's Wellington Letter, put out by Dohmen Capital Research. That's what you can do. You ain't going to change the Fed. You're not going to change the Biden crime family. Trump can't save you, because what's coming is a lot bigger than my friend Donald Trump. So welcome back to the program, Bert. Tell people what's inside the Wellington Letter. What do you cover?
Well, first of all, let me say thank you for the compliments. But
Bert, you are infamous. Bert, you are infamous. My neighbors, sometimes they hate you, the next day they love you. It depends on what you put in your letter. This is Hawaii.
Some people don't like to hear bad news.
No.
I don't like bad news either. I'm very optimistic on everything.
Yeah, but Bert, it could be good news if you get an early warning.
Exactly.
You know what I mean?
This is, in my own trading, this has been my best year since the year 2000, which
Mine
was
too.
the dot-com bubble crash, So you can make a lot of money if you know. But most people think that knowledge comes from the thin air, from the heaven. It doesn't. It comes from books. You read and you study and you inform yourself of what is real, what is not real. Programs like yours, the guests that you have on, and, I listen to some of them and I know them. And you don't hear them on TV, financial TV.
No.
You never do. So in financial TV, it's mostly money managers. We don't manage money. Money managers have a conflict of interest. Right now, they have, the smart ones, they would love to say, sell, get the hell out of the market, but they can't because they will have to close up their business. We have a program, in fact, called Hedge Folios, where we don't manage it. We manage the 5 portfolios, model portfolios of ETFs. And we do the timing. Basically, we said, okay, here's the model change. People get an email and so on, and then they can change. Now, for this year alone, the top performing of these 5 portfolios is up 18%, okay, for this year. The NASDAQ is down 30%. So we have an outperformance of 48 percentage points. That's the kind of performance that the hedge funds will kill for,
Right.
Yeah, but and it's so easy because you can follow the changes. You get an email saying that we made changes. Take a look. If you can replicate them if you want to do that. But that is the best way to do it, because it's not possible on one program like this to tell all the different people with different abilities and so on what to do. One thing I have to say is you want to be safe with your money. And T-bills, the 90-day Treasury bill from the government, that is the safest asset. It was yielding, less than 1% here earlier this year. Now it's yielding 4.3%. And if I'm right, then it's going to be yielding 15% pretty soon. And you don't see them declining in price. The bond market managers now that you see on TV, they say, buy bonds, buy bonds. Yes, you know why? Because the bond market has gone totally illiquid. They want to sell their bonds in their portfolios. They need to create buyers. And that's why they go on TV and say, buy bonds. You know, we don't do that. We have no conflict of interest.
Right.
We can tell the truth. Can you believe it?
What's the difference between a T-bill and a bond?
A T-bill is very short term. Most of the T-bills are 90 days. So every 90 days they roll over. So that means that they cannot really decline in price substantially. The Treasury bond will come due in 20 years or 30 years, and they can lose, as I said before, about 46 or 48% already. Since
so Bert, a bond is long term, and a bill is short term.
Right.
Good. That's a break, because you sound like Harry Dent right now, and he and I go into it all day long. But anyway, we're an educational company. Once again, we do not recommend you do anything. We tell people what we do, but we don't tell you what to do.
Yeah.
And by the way, this is your fabulous Wellington letter. Please subscribe to it. How much does this cost, Bert?
The Wellington letter, I think it's $595 per year. So for that, you get usually 2 issues, sometimes 3, but normal issues, 20, 24 pages. So you get that twice a month. That's a lot of work you get for that little money.
Yep. That's about $50 a month or something like that.
Yeah. Yeah.
Cheaper than my Taco Bell bill.
Yeah. And, we used to do it once a month, but with the markets the way they are, you got to do it twice a month. There's so many changes. Now, we never used to really care about the politics. Never. No. So let the politicians in Washington do what they want to. The markets will do what they want to, But that has changed,
Yes.
So now you have to know what these people are doing. I mean, here, our energy policy, we're going around the world begging OPEC, begging everybody to give us oil. And right underneath our feet in the United States is 400 years of proven reserves of oil. Proven reserves, right. Not guesses. So why aren't we drilling it? I mean, this is... if you would put this in a novel, they would say, well, that could never happen.
That's why I wrote the book, Fake, because this inflation, all this, in my opinion, is fake. It's manipulated.
That book was so timely. When you sent that book to me, I said, boy, right on the button. Everything is fake.
Hey, but Bert, I got a psychological question, because I've asked this. I asked of Harry Dent. I've asked different people. Why do people buy at the height just before it crashes? Why don't they buy when it's low? We all know, if Neiman Marcus had a sale, we'd be shopping. And they said, well, Neiman Marcus is going to is raising their prices 20%. They said, oh, good, we'll wait till it's high of 20%. And that's what people do with investments. So, Bert, psychologically, why do people buy just before it crashes when it's high as can be?
Yeah, it's human nature. For example, before we were talking about options, do you know that in October, we saw the biggest call buying option binge in the history of the United States? Everybody was buying call options on the stock market. When everybody's doing something, you want to do exactly the opposite if you want to make money.
Because I was 20 years ago, I was doing options trading. I just said, I'm going to buy the hard asset. But a call means you call up. You expect the price to go up. Is that how you do it? Call
That's
up.
That's right.
Put down.
That's a call option. Yeah. Right. And a put option is you're betting on the market to go down.
Right.
But everybody wants call options because, the market is going to boom. The Fed is going to pivot. And, the economy, we're going to have a soft landing. Soft landing. Grimm's fairy tales is the closest thing you get to a soft landing. It never happens.
It's going to be one hard one because I think this could be the biggest in history. I hate to be so pessimistic.
Exactly. That's exactly what we've been saying. The numbers confirm that. These are not guesses. The numbers confirm it. We have never had so much debt. When you consider the debt of the United States is $30 trillion. Trillion. We never used to think about trillion because it's too big of a number to think about,
That's on balance sheet debt.
Yes.
What about off balance sheet social debt?
Oh, yeah. That's not even counted.
No.
Yeah.
And I think that's, to me, because I wrote this other book, Who Stole My Pension? It came out in 2000.
No.
And as you know, I don't think these pensions are flush with cash, right, or with assets right now. I think they're hemorrhaging too, right?
Yeah, and they're leveraged, something that we never knew. They don't announce this. Leveraged pension plans. I don't believe this, because most investors should never even go on margin. They should not use leverage for their stock market investments. Leverage is the thing that kicks you out of good investments. They're always bear raids. These are manipulated. The market is totally manipulated now,
right. Yes.
And so, they have these bear raids. And so it's designed to get you out. If you're on margin, the brokerage firm will send you a note. Within 24 hours, we need $20,000, So the broker will give you the best sell signal, and that is a margin call. If you got a margin call and never made it, just sell.
Wow.
That's the best advice you'll ever get from your broker.
Say it again, please. Explain that one more time.
When you get a margin call, it means you have to put up more money for a stock that has gone down.
That's like a margin means you're running on credit or debt.
Yes,
you borrowed money, and they say, well, your asset has gone down below the margin or is lower. That's like you buy a house for $100,000, but now it's worth $50,000.
Yeah,
and the bank says you owe us $50,000.
Exactly.
Is that it? Okay.
And it can even get worse. We had a meeting. This was after the 1987 stock market crash. We had lunch. The big Wall Street guy from a big Wall Street firm came. He wanted our business. And said, what are you doing as a vice president traveling around the country? Because he told us he was very busy traveling to all these different cities. And I said, well, it's housing. I said, I didn't know you were in housing business. I thought you were in the stock business. He said, well, I'm in charge of the foreclosing on houses. He was foreclosing on the houses of people who had margin calls and couldn't meet it. So most people don't even know that. They open a margin call, they don't know that they can lose their house.
Yep. Oh, you mean their margin call in the stock market cost them their house?
Yes.
Wow.
Yes.
I didn't know that.
Yeah. So the brokerage firm has the right to come then and sell your house.
Jeez.
And take the money, whatever money they can get.
So once again, I was going to say to people, it's not so much what the Fed's going to do or the Biden crime family or Wall Street or Donald Trump or those guys. It's what are you going to do about it? I want to say again is that, Bert's been a longtime friend. We both kind of grew up in Hawaii. He lives in California now. But every time Bert's letter came out, there was shockwaves going through Hawaii. How dare you say that? And then you're hated one day, then you're loved the next day. I always thought it was kind of entertaining because that's a market. It's going up and it's down. But the most important thing that Bert does, I think he gives you about a 2-year warning. I think that's what you're doing. Does that make sense to you?
Yeah, now the time frame, Baba, has become shorter.
Right.
News travels so fast and the moves are so drastic. Look at the changes in the Federal Reserve. They kept interest rates at zero, the Fed funds rate, 0 to 0.25% interest rate. And then suddenly overnight they changed it. Now we're at the Fed funds rate 3.7, almost 4%.
Right. So let me. This is the Rich Dad Radio Show. We keep it real simple. Well, what's happening is interest rates were coming down. The debt was going up. So when they raised the interest rate, the debt got more expensive.
Exactly.
And now the question, who pays for that debt, is the taxpayer.
Yeah, the failures. The taxpayer will have to bail out the banks and these institutions and so on.
So let me once again pump your letters called Dohmen, Dohmen, Capital Research, and I call it the Wellington letter. But it is information. He's not selling you stocks, bonds, gold, silver, anything. He's selling you information. What you do with it is up to you. But that's the most important thing, because we see at Rich Dad, your greatest asset is between your left ear and your right ear. It's called your brain. And it's also your greatest liability if you're not putting good stuff in it, right?
Yeah. My father said that when I was a little boy in World War II Germany, okay? And, the Nazis were coming. They didn't like you. They would take everything you had. My father said, get smart. What you have in your brain, they cannot take from you. Right.
And unfortunately, we interviewed a mother and daughter, but what they're putting in the daughter's 15. She says, I can't believe what they're putting in my brain at school.
Yeah. It's tough now.
What the teacher was telling them then, that the recession was over and happy days were here again. She's a school teacher. She's teaching you that. And guys like you and I are saying, we hope we're wrong, but this could be the biggest depression in history because the debt is so high and there's so much misinformation today. And that's why with the Rich Dad Radio Show, we do our best to have people who know what they're talking about. And let me repeat something Bert always says. If your financial advisor is under 40, they're too young. They don't have the scars yet, right, Bert?
That's right. Experience is so important, I'm a little bit older now than 40 years ago, but but it's still the same. You never want to be in a majority. When suddenly we see that the majority is starting to agree with our forecast, we say, okay, we got to change. Why should we be changing? Because the majority is always wrong. If the majority were the place to be, then everybody would be driving a Bentley or a Mercedes or a Rolls Royce.
Yeah,
the majority is not.
I keep saying to all the young people, this is the most powerful entrepreneurial tool I've ever seen. I can call anybody all over the world and get information from all over the world on all this. And now I'm watching the YouTube video, and all of these young people are jumping on the bandwagon now saying, oh, you should buy silver. Well, I've been buying silver since 1964 when I was 17 years old. When I first saw that dime turn to copper, I said, there's something wrong here. And then in 72, I was flying in Vietnam, and that little Vietnamese woman with the red teeth educates me as to what spot meant. Gold and silver are money throughout the world. And the U.S. dollar right now, I don't know where it is. But I don't trade foreign exchange, FX, they call it. Yeah. That's a whole nother specialized science. The most important thing, Bert, is over our years of experience, aren't crashes some of the best times to get rich?
Absolutely. But you want timing is everything. In fact, that is the motto on the Wellington letter. Timing is everything, and right now people are buying. We saw it in October with this huge spree in call buying, everybody thinking it's the bottom of the market. So, of course, encouraged by financial TV and so on. And it's so totally false. We are now in the precipice of the next big plunge. Yes. This is the leg in a bear market where finally the institutions, the big money managers, the big money that's out there, where they checking out, they say, this is terrible. We're not going to have a recovery. The worst is still ahead, and they start selling. But when they're selling, they have to have their shills going on TV and say, oh, this is the bottom or very close to the bottom. Yeah. Sometime next year, the Federal Reserve is going to reverse policy and so on. But what they don't say is that the moment the Fed changes its policy, that's when you have the biggest drop in the market, because the big smart money says they're only changing their policy to loosening money because things are so bad.
Yeah. And that's like, being the skipper of the Titanic saying, hey, ladies and gentlemen, free food and champagne in the dining room while they're while they're manning the lifeboats, right?
Exactly.
That's what they're doing right now. This is November 2022. They're manning the lifeboats. They're front running the markets. You know, they're getting out of Dodge, and they're telling everybody, oh, the recession's over. Don't worry, you know, buy the dip.
Yeah.
The Fed's got your back. I'm going, holy moly. I mean, how stupid can you be? And then they watch, hey, Bert, then they watch.
It's not stupid. It's just uninformed.
Oh, no, Bert. That's called misinforming. You know, they're saying, hey, free champagne. Well, I say, can I get boat number 8 so I can get off of here? You know?
Yeah. Well, I always say, you know, always pretend that the people who want you to buy something, they're the thieves, you know?
Yeah.
And so I've never trusted thieves with investment advice. But, you know, this is such a great opportunity. Lehman Brothers, you know, we said at the beginning of 2008, we're going to go into a financial crisis by year end. And everybody was, oh, the economy is great, no recession in sight, was what the Fed chairman said to Congress and so on. It was all a bunch of baloney. Then we had Lehman Brothers going bankrupt on September 4th that year. And we gave advice to buy 5 different ETFs, that inverse ETFs that rise when the market plunges. So those 5 had an average gain in the next 6 weeks of 72%.
Wow.
The best performer was up 91% in 6 weeks.
Wow.
See, these are the opportunities in a bear market. And most people, they say, no, in a bear market, you got to hide underneath the bed, you know? Got to be, no, this is a great opportunity. Inform yourself, read, study. You know, people think it's so easy to buy a stock. You just pick up the phone and tell the broker. Now it's even too easy because you can do it on your computer. There's nobody in between that can stop you from stupidity, you know? So the people have to inform themselves. Right. This is a wonderful opportunity. We cannot change the trends, okay? Right. I wish I could, because then we wouldn't have a depression.
It's been a long time coming. Bert, this one is a big one because it's a long time coming. And the debt has never been higher at any time. I cannot believe it. And they're raising interest rates into it.
Yes.
Holy
there's
moly.
an 80 to 90 year cycle that is very dependable. The last one was the Great Depression. And that's why I said in early 2020 that we're going into depression. And I listed all the things we're going to see. We're going to see droughts. We're going to see famines. We're going to see locust swarms infesting Africa. And we're going to see wars.
Right.
And everything that was coming true by the end of last year, except the war. We didn't have a war yet. That came 2 months later in February of this year.
Right.
Ukraine.
Yeah. So I just want to leave people with this thought. Again, I don't make anything. Bert, do I get paid a commission for this?
No.
Because,
no, that's the best. I love that. You have no conflict of interest, and that's great.
Because, you know, it's like you go to Vegas, they go, the croupier goes like this, their hands are clean. My hands are clean here. I'm not telling you to buy it or not buy it. I'm just saying it's available. And it's about $50 a month, more than my Taco Bell bill. And I'm going, holy mackerel. But you'd rather listen to a financial advisor who graduated from college 2 years ago. And all they know is the BS. You know, it's like my friend John McGregor. I don't know if you know him. He's from Hawaii also, Punahou graduate, friends of Obama and all this. He says the 10 top reasons the rich go broke. He trained financial planners, and he won't do it anymore. He says because he didn't like what he was teaching them to do. Yeah. So he wrote this book, The 10 Top Reasons the Rich Go Broke. Not bad for a Hawaii guy, huh?
That's very good. Yeah. Yes, that's very good. But
Bert, some of our friends are in that book, the guys who used to be rich. Lots of them.
I know one that you are referring to. In fact, we were just talking a sad story. We were with a good friend of ours who is the president of a major international hotel chain. You probably know who I mean. And he was also my tennis partner, a really good athlete. And so he and his wife were over, and we kind of reminisced about one of the people you were talking about.
Right.
Yeah, it's a very interesting story because they were also doing business together.
Right.
But listen, you got to be smarter than the rest, and you don't ever go by everybody else is doing this, so I want to do that too. No, if everybody's doing it, you don't want to be doing it.
And you don't even have to be smarter. You don't have to be a college graduate. If you can read, buy this, $50, read, you're better informed. That's the better information.
I always tell people, read books. You get then all the total knowledge that a person has accumulated over 40, 50 years of their lifetime. You get in a book for $20. I mean, there's no better bargain in the world than reading. But nobody reads anymore. They think going to Facebook is a reading.
Or TikTok.
Yeah, or TikTok. But you mentioned $50. We also have trading services for people who are very experienced trading the market.
Good.
Comes out maybe twice a week. And so that's $500 a month. Okay?
Good.
So that's for people who want to make a lot of money. And this year has been absolutely fantastic.
That was my bar bill at the restaurant last night. $500. I mean, it's so expensive today. I cannot believe it. And one thing I want to say about inflation, it's permanent now. Do you know what I mean? When they messed with oil, they did it. Biden
exactly,
did it.
and it's transitory. Yes.
Oh, jeez.
Life is transitory. We only live 80 years or 90. I'm hoping for 100, but that may be too long. But it's transitory. Eventually, we die. So everything is transitory.
Yeah. So I'm going to close by saying this, Chairman Powell, he just said in his last speak, he used the word pain 3 times. And he used the word, they're using words right now trying to warn you, and Bert and I are doing our best to warn you. Yeah. You don't have to be a victim of this whole thing. Yeah. This could be the best time of your whole life, but you've got to choose who's putting the information into your head.
Yeah. So it's too bad that we need a bad situation to make the most money you could ever think of, but there's no alternative. You're going to lose a lot of money no matter what you do in other things. For example, if you have a house or 2 houses and so on, they're going to go down in value quite a bit, but at least you can compensate for that by doing some of the things that we're advising people to do, going short. You can profit from this, and eventually there will be a great time for precious metals, but they're really hard to time because it's such a manipulated market. Right. You read about these lawsuits of the regulators against the big banks, JP Morgan, et cetera, et cetera. They get fined a few $1 billion for manipulating the gold market and the silver market, it's incredible. And it's like a slap on the wrist because they probably made 30 or 40 billion with the manipulations. So they got to pay a $2 billion fine. That's a bargain.
Right. So Bert, thank you. Thanks for the years of friendship. I'll send the video of the Vietnamese food.
Please do that.
I get hungry thinking about it, but they're great people, fantastic people.
Yeah.
And it's interesting. Both you and I had to leave the People's Republic of Hawaii. It's a great place, great people, but horrible government and economics. Yeah. So Bert, thanks very much.
I wish you all the best. And thank you for all your friendship over the years and your success. And people that listen to you, they're on the right track.
Thank you.
You have some great guests on your program, and they tell you things that you don't get on your regular TV.
Right. And as I say in Hawaii, aloha and mahalo.
Aloha. Okay. Mahalo.
Okay. Thanks very much. We'll be right back. Welcome back. Robert Kiyosaki, the Rich Dad Radio Show, the good news and bad news about money. And I'll tell you what, this was good news. We're going into the biggest crash, possible depression in world history. We hope we're wrong. Both Bert Dohmen and I hope we're wrong. But this could also be the best time in your life if you're prepared for it. So that's why I make no money on this thing. This is Bert's Dohmen Capital Research, Dohmen. Just go to the website, check it out. And then, for $50 a month, you'll get information because the most valuable asset or liability is your brain. And who's been putting stuff in there? Well, it's up to you to decide now if you're older than 15. Who puts information into your brain? So what did you think, Sarah?
Yeah, I think that's a great point. And I think Bert even brought that up was there's so much noise, right? Most kids most people under 25 are getting their news from TikTok.
Yeah.
That's scary because you're talking about a 1 or 3 minute clip.
Yep.
You can't give context or the big picture, like you like to say macro. And, so it really, you have to be careful who you're listening to and who your teachers are.
And invest your time wisely, because that's your greatest asset is time. Especially at my age, time is more valuable.
We're running out of it.
Yeah. But if you waste your time, watching TikTok and, I don't think I've ever been on TikTok, but I waste a lot of my time on other things, But it is our greatest asset, is our brain and our time and what we do, who our friends are, who we listen to. And so that's why I always recommend, listen to this program again on richdadradio.com, listen to the podcast, and talk to your friends. Yeah. Because you'll learn more doing that.
Yep.
What did you pick up, Sarah?
Real quick, I want to go to the word inflation. So this recent newsletter from Wellington Letter is all about soaring inflation and how to survive it. And I saw in the news last week, there's I forget her name, but she's like, the Republicans taught the society the word inflation. People never cared about it before. And I'm thinking, that's what's wrong with us.
Yes.
Is that we don't care until 2 days before midterms.
Well, why would you listen to this person? She's saying the Republicans I saw that, but it is pure misinformation.
Exactly.
And it's not even propaganda.
Right. It's totally, you shouldn't even know the word inflation is what her point was.
Yeah.
Why? Because then they can continue to take your money without you even knowing it.
Right.
I don't know. So anyway, I wanted to bring that up because I was like, we're getting to a scary time. And if you don't start spending your time wisely, you're going to be left behind going, what happened? I don't know what happened.
And you missed the biggest opportunity of your life.
Yeah.
Like after 2008, Ken Macro and I borrowed $300 million because real estate was on sale everywhere. Mm-hmm. And interest rates were down. I thought I died and went to heaven, Everybody, it's terrible. Real estate market's terrible. It's down. Yeah. So they wait for it to go up, then they buy, then it crashes again.
Yeah, and I think we're going to see that in the real estate market now.
God.
And I think we talked about this with Kenny, like interest rates are at an all-time high. So if you're buying a house, you're paying more than you would have, just 6 months ago.
Correct.
For that same house. So people are buying now, and what's going to happen in 6 months?
And it really disturbs me because people come running up to me and say, I took your advice, I bought real estate. I said, the question is when? What were the interest rates? What's your debt to equity? Yeah. What's your ROI? What's your net operating income? I don't know any of that. So you just want to unbought because I think real estate's a good investment?
Well, and I hear so many real estate agents saying, don't worry, you can refi. Once the market settles back down, you can refi out of that interest rate.
Always remember what Bert says. If they're under 40, don't trust them because they haven't been through the pain yet. And I've made so many mistakes. I've lost so much money, friends, and all this. But that's called wisdom. And that takes a while to get.
Well, and so 2008, I was 24. I had no clue what the financial crisis was, I knew it was bad, and I knew that the stock market had fallen, but I really had no idea what was going on. So now that I'm older and wiser, and I do have my own properties, I have so many friends who are relying on their 401k. It's like, to your point, share what you know, talk to your family and friends.
Yeah,
because
discuss.
Because all you can do is depart that wisdom and hope they do something about it.
There's a saying that I have all the time. It says, don't teach pigs to sing. It wastes your time and it annoys the pig. And I can't believe how many pigs are. They go, don't worry, the Fed's got my back. I buy the dips. I got a 401k. I have a government pension. And those are the things are going down. And this inflation is now systemic. It's now permanent. And the crime family known as the Bidens, they did that in 2020. What year am I in? 2020, when they got elected, they took off the Keystone XL pipeline. The price of oil went from $30 to $130 a barrel. So I'm selling oil at that time at $30 a barrel because I don't buy oil stocks. I buy the oil in the ground. went from $30 to $130 a barrel. I almost voted for Biden after this. Thank God. He made me a richer man. But I also realize what they're doing, what these academic, democratic, liberal greenies are doing, is that the poor will always be poor. I mean, this says in the Bible, the poor will always be amongst us. But by raising the price of oil, they took out the middle class. That's intentional. And that's why I wrote the book, Fake. This whole thing is fake. It's set up. And that's why I appreciate everybody listening to the Rich Dad radio program, because I have nothing to gain, but I don't tell you what to do. I would not recommend what Bert says to do. We're just saying we tell you what we do.
Yeah, I think that just means that people have options. Not everything is going to be the same. I'm not investing in the same things you are.
No.
You're not investing in the same
different.
things. We're all different. But there are options, and you have to be educated in those options. But now's the time.
Yeah, this could be the greatest opportunity of your lifetime. And as we say at Rich Dad, your greatest asset or liability lays between your left ear and your right ear, which is why we have the cash flow board game. Because as Maria Montessori, the great educator, says, what your hand does, the mind remembers. When you play the cash flow board game and you have to fill out the numbers and all that, your brain is engaged, your body's engaged, your spirit's engaged. It's a lot better than listening to some financial expert tell you what to do. Mm-hmm. So thank you all for listening to the Rich Dad Radio Show. And again, thank you to Bert Dohmen of Dohmen Capital Research. His letter is called the Wellington Letter. It's about $50 a month, best investment you could make. Thank you all for listening.